All right, so I put out this tweet a few days ago, and I'm going to bring this up because a lot of times when stock prices fall, people, in my experience, lose sight of really the long term and start to actually increasingly focus on the shorter and shorter term, often by checking their accounts more and more often and wanting for whatever it is that when prices were rising or stable, they were perfectly willing to wait for. But now that prices are doing the reverse, they want their stocks to really to be higher. They want it to happen instantly. And today I just want to throw a circuit breaker. I want to throw a firewall into this. And I put out this tweet based on the Big Ideas conference that Cathie Wood and ARK Innovation recently held. Fantastic conference. I really highly recommend that if you are invested in our stocks, Cathie Wood and ARK Innovation and us, we are in parallel. I will say that we're probably like 95%, 98% in terms of stock selection, and pretty close to 100% in terms of market outlook. Both Cathie Wood and ARK Innovation, we are both expecting a world of massive innovation, fourth industrial revolution innovation, we call it America 2.0, to come and completely upend the way that life is lived, certainly in America, in most parts of the world, and to sort of completely transform life as we know it. I recently saw a video on YouTube that showed a bit of what life was like in the 1800s, pre-industrial revolution. And that's the kind of change that I believe is going to unfold over the next 5, 10, 15, 20, 30 years. And if you watch this video, I mean, that life, which was, about 150 years ago, was so difficult. I mean, they spent a half an hour lighting a fire. The fire was the most critical aspect of running a home. They cooked using kettles that were hung in the fireplace. They made their own butter. They made their own soap using the oil that was left over from cooking fat. I mean, it was an extraordinarily laborious life. And once machines came, whether it be steam engines, whether it be motors of any kind, I mean, a lot of those things simply got mechanized and that human labor went away. And while it may seem far-fetched today to compare our life today to what it was in the 1800s, however, just think, I mean, in 100 years, where we have come, where none of these things, no one makes soap at home. No one cooks over our fireplace with kettles. I mean, there's simply none of that of any way, shape, or form that's there. And I can say personally, coming from India, that when I grew up, we actually cooked in my grandparents' house with a wood fire. We had a gas stove, however, gas in India was quite expensive, and so we only used it occasionally because we didn't want to pay to refill the gas, and so we saved it for special occasions. Telephone calls were a big deal. My parents lived in Dubai, and you had to book a call. In other words, essentially, you had to reserve scarce lines that were available for international calls between India and Dubai. And you would speak for something like 3 to 5 minutes, and it was crazy expensive, crazy expensive. Flights to go between Dubai and India, where my school was in the thousands of dollars, And even between that time and now, so we're talking the 1980s to now, which is about 40 years later, I can tell you that pretty much everyone in India is using a gas stove. No one's using firewood anymore. I mean, there might be maybe in very, very, very rural areas. However, pretty much everyone has moved to a gas stove. And lots of things that were sort of luxuries of that time today are every day all over India. And so I'm bringing this up because most people are probably not thinking on this sort of very granular level about change. However, having been through sort of a few different worlds, as I like to put it, I mean, my first world was really growing up in India, which was very primitive, really very, very simple, very primitive. I mean, we had a car, but a lot of things that I take for granted today, electricity, running water, were intermittent or not always available, or in some cases, luxuries. Transport was basic. We took a lot of buses and they were pretty basic, and you walked a lot. So I've seen a transformation from there. Then I went to Dubai, which had a much higher standard of living. We had more food. We had more options in terms of a number of things. Our car was nicer. And then coming to the United States, where it's a step function jump between what I was born into in India and then what I had in the United States. And that's what is about to happen, except it's multiple step function jumps. And I put up this slide from something that Kathy Wood and ARK Innovation presented. And I said that the chart from ARK Invest lays out how stock market value will go to America 2.0 stocks, our stocks, sometimes slowly, other times quickly. And I put that in because I get, of course, a barrage of hate mail, a lot of people looking to insult me, denigrate me, call me a fraud, a scam artist, or one that was particularly interesting. I was called a grifting clown when stock prices go down. So I want to make it clear that this is normal. This is completely normal for us to see stock prices sometimes really discount what is going to happen in the future slowly, other times quickly, sometimes in fits, starts and spurts. So this is what we have gone through is normal. It is something that has happened in the past as we've gone through changes, and it's happening. And then in hindsight, everyone will be like, oh, in hindsight, if I looked at the charts, this was the perfect place to do it. And, we'll all be clear, as I put in this tweet. However, the reason to stay in is because of the size of the change and the number of changes that are available to us. So in this tweet, you'll see that this chart from ARK Invest highlights 5 of the big technological shifts, step function shifts that are happening, not going to happen, they're happening. The first one is artificial intelligence and has a compound adjusted growth rate of 26%, battery technology of 35%, blockchain has a growth rate of 43%, robotics of 51%, and gene sequencing 40%. So the reason to be in this is that these are very, very, very high rates of return. These kinds of returns are not available all the time. These kinds of returns are available once in a generation. When you've got so many different things going on all at the same time, they all sort of build on each other, capitalize on each other, feed each other, so as to be able to create that step function jump, like what the Industrial Revolution did, over 100 years ago, where life as it was is nothing like what life as it was sort of as it went through, and certainly towards the mature periods of it, where it had completely transformed life, which is more or less what we have today. We've got cars that are completely reliable. We have houses that have all kinds of things that are beyond the imaginations, the wildest imaginations of what people ever imagined back then. So to get, once again, just a little bit granular, I wanted to sort of run some, almost like a projection, which is that let's just, for the sake of assumption, take that ARK Innovation's numbers are real, and that we can use it as a forecast, as an estimate of what is going to happen in the future. So I actually made this worksheet up. And what I did is I put $10,000 starting 2020, because that's when this chart begins, into artificial intelligence, assuming that we have the right stocks, we're in the right basket for artificial intelligence to get the benefits that are laid out in the ARK Innovation slide. And then $10,000 into batteries, $10,000 into blockchain, $10,000 into robotics, $10,000 into gene sequencing for a total of $50,000. And then I compared it to ARK Innovation's estimate as to what non-innovation stocks are going to generate, which they estimate around 3%. I think that estimate, truthfully, is a little high. I would expect actually a loss for those stocks. And so 3% is what they have. And so I'll go with that. And you can see that obviously the compounded growth rates drive the values over time, 2021, 2022, 2023. You will see that the highest numbers come from robotics because that's a 51% compound adjusted growth rate. And then you see the others, it's $100,000, 10,000 turns to $100,000 for AI, 201,000 plus for batteries, 367,000 plus for blockchain, robotics is 616,000, and gene sequencing is about 289,000 for a total of 1.56 million at the end of the 10-year period beginning 2020. And the non-innovation portfolio at a 3% compound adjusted growth rate gets you to $67,000, a nice return, but nothing like $1.56 million. So why do we focus exclusively on America 2.0 and the fourth industrial revolution? Well, it's because of this, because these high rates of return are not going to be available forever. They are going to be available really to people who are willing to take the risk, willing to withstand the volatility and stay in, because you just don't know which year will be the year where you will get a 100% jump or a 60% jump or a 90% jump or maybe a 200% jump, and where the big wealth will be made. It could come right after a crash. It could come after a period when nothing has happened. And this is why we have our motto of strong hands and of staying bullish and optimistic and positive, because these compounded adjusted growth rates are so high that it is well worth your while to stay in. However, only if you believe in the underlying scenario, only if you believe that the promise of these technologies is real, the promise of transformational change is real, and that it is happening, not going to happen 5 or 10 years now, happening. Because change never happens sort of like, here and then suddenly here. It happens, in stair-step fashion over time. And it's only somewhere, after the initial stage that you tend to get a hockey stick moment of growth. However, the markets will anticipate that. And I've used the example of Tesla before to indicate this, which is that Tesla today is worth more than just about every other car company on the planet. And the market is anticipating a period of dominance in electric vehicles, autonomy, energy storage, and for this company that today they actually don't have. In other words, they do not have $20 trillion worth of sales. But the market is projecting forward and discounting the fact that Tesla is going to dominate electric vehicles, going to dominate autonomous vehicles, and going to dominate storage of electricity as a result of capturing energy from the sun. And that's how markets are. They will look forward. However, it will never, ever, ever be a straight line. And there will be periods when prices get knocked down and knocked down hard. And if you're out, my experiences and all the research on the psychology of investors is that once you persuade yourself of a negative and of a bearish and pessimistic point of view, that's the view that you tend to see. And you're always on the outside looking in. And then only in hindsight is it going to be clear, like, oh, I should have gotten in here and gotten out here. This is not something that the vast majority of humanity, I'd say anybody in humanity, is capable of, which is that no one knows exactly when the market's going to move in one direction or the other. That's why we tell you all the time, be strong hands, be BOP, and follow what we refer to as rules of the game to really try and size your positions, size your risk for your own personal financial situation. So that's my video for this week. Come back next week for another one. Until then, this is Paul saying bye.